Okay, folks, welcome back. Week ending May 31st, 2019, ICT Mentorship Weekly Review. Take a look at the economic calendar for the coming week. We start a new month, June. So on Monday, we have GDP Manufacturing PMI during the London Open. 10 a.m. New York Open. We have ISM Manufacturing numbers, high impact for dollar. On Tuesday at 5 a.m., we have medium impact CPI flash estimate and core CPI for euro. And on Wednesday, London Open, medium impact service PMI. And 8:15 a.m. New York Open for dollar is non-farm employment change. And 10 a.m. on Wednesday, we have a medium impact ISM non-manufacturing PMI. Thursday, we have monetary policy statement, high impact during New York Open for euro, and main refinancing rate, medium impact. 8:30 a.m. for Canadian dollar, we have trade balance, high impact, and euro at 8:30 a.m. on Thursday, ECB press conference. And Friday, we have 8:30 a.m. Canadian dollar, high impact employment change, unemployment rate, and the dollar, we have average hourly earnings, non-farm payroll, and unemployment rate. So our typical non-farm payroll volume, and the protocol is obviously we want to be done our trading by Wednesday, New York Open. So looking at the economic calendar, it looks as if Monday to Wednesday here still has the favorable setups for the economic calendar, and everything goes to low probability. Doesn't mean it won't have volatility. It just means low probability in terms of very clean price levels for Thursday and Friday because of non-farm payroll and the ECB on Thursday. So let's take a look at the charts, starting with the dollar index. Okay, folks, we're looking at the dollar index. This is a daily chart. And you can see we had a little bit of a follow-through on the upside last week, with Friday giving up a lot of the ground. We are at an area where it needs to be supported for the near term bullishness. So we have fair value gap, bullish order block. We traded down into, we closed near the low. So we'll be looking to see if they want to take it higher, blow out these relative equal highs. Again, I'm not trying to pick the top in the dollar index. Last week you saw the fruits of that. We went higher for opportunities to go short on foreign currency. It just doesn't look like it's done yet. Now, I'm comfortable with allowing it to prove to me that it's going to make a reversal. And again, without being a dead horse, you hear me say this a lot, but it's important for you to hear it over and over and over again, because higher time frame trends tend to stay in that trend for a long period of time. It's going to take something significant to change the direction of the dollar, and I don't see it yet. So protocol still is we're looking for reasons to find supportive bullish stance on dollar, and foreign currency still remains weaker. Drop into an hourly chart, and you can see we have what looks like a market maker sell model in here. Consolidation, lead consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, redistribution, redistribution. And personally, I think this is one of the sell models that could just continue on the upside. In other words, it gives you an initial retracement, but because we're part of a longer term bullish trend, this may not need to take out this low. So if we do take out this low, it's more meaningful to me, but it still would have to go below May 13th's low for me to be decisively convinced that we maybe have turned the tide on dollar. Now, there's a lot of things going on in the United States that relates to our economy, specifically dealing with Trump. He's now going after Mexico for with a tariff, with a I think 5%, if I recall that correctly, 5% tariff on 5% tariff on Mexican goods. So even some of the Republicans are upset about that. So there's going to be, if this continues, it could get real ugly for the dollar index. And I'm not suggesting that it's the top, but there's some things that are on the horizon that could really turn this into an ugly situation. So, nonetheless, if we drop down into a 15-minute time frame, you can see a little bit more definition, some of the fair value gaps, imbalance, and rebalancing, and runs for liquidity, near short-term sell-side liquidity, rest below these relative equal lows. This is a close proximity run on liquidity, so we could see very short. You could actually gap down there and get into this, but this right here, this is more meaningful. It's a little bit more pronounced. Our Candyland scenario, a double bottom, a lot of liquidity is going to be pulling below there. It's still not the low of the 13th, and again, zoom in a little bit more. This would have to be broken for me to be convinced again. Okay, Euro dollar. We had a nice pop higher. I'm going to counsel you to look at what I taught you relative to the wicks, okay, and consequent encroachment, and I'll show you what that looks like when we get down to a lower time frame. But for right now, we have price returning back up into a fair value gap. If it goes above the fair value gap, we have relative equal highs here. That's our daily liquidity pool, and it's around that, what is that? 112.15. So 112.15, 112.20 institutional. That would be the near-term draw on liquidity if we do see a slide lower on dollar index and euros allowed to rally even further. If this does eventually find its way turning, and again, I'm not trying to suggest to you that I believe it is, because it's non-farm payroll. We expect the month to have some kind of a Judas swing this particular week every single month, and we want to see evidence to support that, yes, the dollar may have created a high. I don't think it's there yet, but if we start seeing the euro really start to vault and go higher, remember, this has not been allowed to drop. They've been holding it in consolidation, and cable's been allowed to really fall out of bed. So this may be only what's required to give up to a fair value gap. It may not even get to a liquidity pool. For the bears, that's the ideal scenario. You want to see Friday's gains, more or less, on the day give back relatively quick, this week. And then we would expect the weekly BISI to fill in, which is a buy-side imbalance, sell-side inefficiency, right here. So that's still a potential. And we're still in really small ranges for the weekly ranges. And if we get back down below this low, it would probably create a large range environment for the weekly. Dropping into an hourly chart, we have a small fair value gap in here in this price swing. Then we have relative equal highs with another fair value gap in there. So it would need to, in my opinion, stay below 112.10, and it would still be fairly bearish. Nothing's really changed yet on euro. It may just need to come up and clear some liquidity, pick up more counterparties to go short. But if we take out this high and really start to gain ground on that and lose on the dollar, it's one of those months of the year where it could potentially be bullish for foreign currency. But again, it's one simple ingredient, if you will, of an overall recipe for success. Just because the seasonal tendency may imply that we have some bullishness that we would expect to see, it doesn't mean it's going to come to fruition yet. Stick to the longer term, higher time frame trends, and then form fit that with seasonal tendencies. Then it becomes a lot more stronger, if you will. On a 15-minute time frame, if we zoom in a little bit here, you can see hasn't been a whole lot of imbalance or fair value gaps. It's been respective order blocks and then reaching for liquidity. So for those individuals that are charter members, you can see that the price action models that would use the order block and then run to liquidity, that has been working pretty well for euro dollar. The absence of fair value gaps and imbalances, it's been rather sloppy. And really, if you look at Eurodollar as a whole, for the last couple months, Eurodollar has been really, really poor in terms of its technical picture. It's been really muddy. It hasn't been really giving a lot of real clean price levels. It doesn't mean that you haven't seen me take advantage of what's been available. It just means that it's not as clean as cable has been, and everything has been lined up with cable. So that's where our focus has been. So we're going to move over to cable. Segue there. Here's the British pound versus the dollar daily chart, and I want to counsel you to go back and look at this day right here, May 3rd. Okay, that was non-farm payroll, the last non-farm payroll. And I said this could be the Judas swing for the monthly range, creating a high. And typically that's what we expect if all the other factors are lined up with non-farm payroll creating the high or low of the month. So the monthly range, you can see we opened Judas swing higher, and then it's just all distribution since then. The level in here I thought was interesting enough to share here, and while I did not mention it beforehand, it's the last down close candle here. This is a bullish order block, but it's the last down close candle. The open on this candle comes in at 25.58, and the low on this candle comes in at 25.58. So really nice reaction there. If we look at what's available on the daily chart, it doesn't really have a whole lot except for the fair value gap that we're trading into here. I'll zoom in just a little bit. And we have a fair value gap here. There isn't that much of a interest for me to run to this level here. I think if we are seeing a turn on cable, and again, I'm not suggesting that we are. And for those individuals that just started, the normal procedure we have for non-farm payroll week is we have very, very low expectations the first week of the month, because generally that's expected to be an accumulation week and then manipulation on non-farm payroll. So think of it like a daily range and how I use Power 3 for that. Asian range creates the consolidation, and then during London or Frankfurt, we get that fake higher high or lower low, and then the opposite end of the range is created throughout the rest of the day going into London close or late New York close. That same phenomenon occurs on the weekly and also happens to be on the monthly. So Power 3 is not limited to intraday. But if we have a turn that's forming here, okay, maybe we have created the low for a couple weeks to come, and maybe for the month of June. I'm not suggesting that we have yet, but because of non-farm payroll being this week, the purest form of technicals are going to be seen Monday, Tuesday, and through New York Open on Wednesday. After that, it's hands off, because there's going to be a lot of tomfoolery, if you will, that takes place. Not always. Many times, the week of non-farm payroll can be a little bit more exciting than typical. Like anything else, Murphy's Law, whatever can go wrong will go wrong. So if you're planning for a low volatility event or low probability event, like non-farm payroll is, to me, in my opinion, post Wednesday New York Open all the way to Friday's New York session, where non-farm payroll is released at 8:30 a.m. New York time, to me, they are very, very low probability periods of time. So I'm okay with not trading them. I'm okay with folks not agreeing with that. You can do whatever you want to do. I'm just saying this has served me very well for 2.5 decades. So, if you want to go in there and press the odds, you can be my guest. But I'm telling you, as a mentor, you just want to have rules and filters, and it's just a good practice simply just to do this every first week of the month. We'll go in on the weekly review and dissect what non-farm payroll does on this coming Friday, and how that relates to the monthly range and how we can utilize that like I did with this month of May. The focus has obviously been bearish on cable. We've elected to follow this pair and not do so much work with the Eurodollar, and outperformed again. So the low expectation that we have for this week, or I hold for this week, doesn't give me a lot of opportunity for cable, at least not in the scope that we have seen this past 4 weeks. The month of May has been really phenomenal for cable. If we drop into an hourly chart and put our day dividers in, back out one more time here, there really isn't anything that stands out. There's nothing inefficient about this move here. So we may just need to come back down into an order block. So if they do retrace a little bit and don't take out this low and they want to move higher, I don't think cable's the pair to be doing it in. I would rather be long or going long if we get reasons to do that in euro. Okay, so it may sound like I'm talking out both sides of my mouth, and it's because I don't have a real clear picture of what we're going to do this week. In certain weeks of the year, there's going to be times where you hear me tell you very clear and very candidly that I don't have a real good read on what it's going to do this week. I'll require more information on Monday, and then if there's something that would change or sway my opinion about a particular view or create one, okay, that is absent right now, then I'll share it with you. But as it is right now, I don't have a whole lot to go on. May's been a really beautiful month for cable. It's delivered way above what we expected. Lots of opportunities, lots of setups, a lot of signals. And since it's been the leader on the downside, I don't want to go in here and start trying to pick the bottom in this one. Same way I don't want to be doing the opposite by picking the top in the dollar. So what does that mean? What do we do with this information? What am I getting at? You don't want to do a whole lot this week. Keep your expectations very low. Scalping only. I don't think we have like one shot, one kill scenarios really lined up for this week. Day traders market, scalpers market, and try to keep your entries and your targets very, very nimble, and don't expect a whole lot. Keep your expectations low. Look for runs on liquidity, intraday trading, intraday volatility, and then work with that model as a procedure for this week. If you really want to practice your patience, I wouldn't do anything this week. I mean, obviously you're supposed to be still working on your walk forward for the fair value gap. We did 4 weeks of back testing, and now should be in the process of still working on forward testing. Working with that as your homework, that's fine, but I wouldn't try to engage too much. And again, the real focus is having very low expectations this week. It's the beginning of the summer. It's when seasonal tendencies can affect a intermediate term in the marketplace. And we just got to be a little bit more patient than you're probably willing to do so now. But you've been here for a while now, and you know that there's times where I say, I don't know really what's going to happen yet, but then I get more information, then it becomes clear, and then we go right back into the swing of things, and it starts doing everything I tell you it's going to do. We just had a whole month of it. So now, just like small ranges bring large ranges, and then large ranges do what? Bring small ranges. So we want to bring our expectations and our activity level down, whereas we would have been very busy this month with the expectation of a very low, weak British pound and focusing there. Lots of setups, lots of trades, day trades, scalps, swing trade, short-term trade. There's all of it's there, okay? But now that period has turned to a time where we have to have very little activity. Be very quick to protect your money and preserve your capital, and move very slowly when you're trying to make money. I learned that from Larry Williams. He mentioned that in one of his keynote speaking events. I caught it on a VHS. It was Secrets to Short-Term Trading. Real hard to get. It was a completely different perspective on some of the things he talks about, and it was kind of like a special engagement type thing, and I picked it up from Trader's Library back in 1996. And because it's VHS, it's been worn out, and I don't have access to watching it anymore. But that's what I had heard it from, his discussion and his keynote address for that, just I guess whatever he was doing that night, teaching short-term trading. And it's always resonated with me. And I try to kind of promote that in my teachings. So he's left that fingerprint on me. And I try to counsel you all as my students to do the same thing. Don't try to move too quick when you're trying to make money. Move slowly when you're trying to make money. When you're doing things that's really kind of like slanted or weighted with the result of trying to make money, you want to do things very slowly. Okay? Don't rush to get in there. It's basically the layman's way of saying it. Rush or be very quick about trying to preserve your capital. Okay? It doesn't mean have scared money. It just means that if you feel that everything just turned and the bottom fell out of your idea, don't be afraid to nix the trade, regardless. And that's what we are as traders. We're career losers. We learn to lose profitably. Every trade starts off as a loser. You got to cover that spread. And environments like what we got here coming into this week, it just builds more probability that it's going to be harder for you than it normally would be. So if that's the case, why would you push your odds? Why would you over leverage? Why would you trade more frequently? Why would you overtrade? Why would you consider forcing a trade? There's no reason to do that. I don't see it in the charts. I don't see anything that's very definitive about cable or really euro. So don't force it. Don't push it too hard. And like I said, if you really want to focus on developing, just take this week off and just use next week as your continuation of the fair value gap walk forward. And to me, that would be the higher form of practicing. You're practicing patience, and you're also preparing yourself to remove yourself from the marketplace and giving yourself permission to not do something when there's an environment where there isn't a whole lot of probability on your side. And that's something I wish there would be more written about, because I have thousands of books, and none of them really touched on that too much. So I try to do that when it's available in the marketplace, and for the most part, I'm still in the 90% range where if I tell you it's low probability, it's generally low probability. But there's times, if you go back through the mentorship, you'll see that I was expecting very little, and sometimes it does create some, a lot of excitement. That's okay. I'm not worrying about that, because I knew how to find high probability scenarios, and I'll work in those. Think about it. I don't trade Sundays anymore. It doesn't hurt me to do that, and I'm growing older, so I don't need to be all that action hound. I don't want to be in there doing a lot of that. And as a teacher, I kind of want to promote that idea too, because the balance that it gives your life is so much better than trying to always be in the moves. Okay, finding the next move. And social media really fuels that. It may be indirect relationship that happens because we're engaging as a community, but I've always been kind of like egged on by other people, and I'm human too. I like to show off when the guy just is asking for it, but I kind of want to backpedal and move away from Twitter. So I really don't want to be doing too much more with Twitter, and that's going to bring us to the discussion for going forward. I want to be on a schedule, so that way when I'm going to be posting something. I'm not going to be posting links and tweeting links when a video goes online. So this coming week, I'm going to work with my family and try to outline a reasonable schedule, so that way I know this is a timeline I'll meet every week for Wednesday and Friday videos. And that way I have my weekend free. You have the whole weekend to digest the information, and you also know when the videos are going to post. So there's no necessity on my part to tell you, hey, something's online. It's a schedule. I have to meet that schedule. And obviously, like a vacation or something that comes up that's unexpected, I'll have to inform you by way of the forum. But I don't want to be managing the mentorship at all anymore through Twitter. It's very toxic there, and I'm really spending a lot of time in front of people that don't deserve my attention. So I kind of want to focus on the community we have here, gradually move away from using Twitter entirely. I mentioned there's a couple people that I talked to in the community that I eventually will be away from Twitter entirely. we've grown to a really large community, and it's so hard for me to manage it, even with the help that I have. It's not anything but more distraction now. So I just wanted to bring that up, let you guys know, in case you start seeing a real drop-off in my tweeting. It kind of was like that this week. It's just, I don't get the buzz out of it like I used to. And recently, you've seen a lot of things go really disgusting with other people going back and forth with one another. And I don't want to be a part of that anymore. It's really, really disenchanting. So I want to stay positive. I want to be positive for the community. I want to keep my mind focused on giving you new content, and I don't want to have any more of that distraction for Twitter. On a 15-minute time frame on cable, you can see we've had a really nice pop off that order block. You see a beautiful response there. And again, the only thing that really stands out on this chart to me is this area in here. And it may not even get there. It just does. I don't have a whole lot to work with in here. There's really no imbalance in here that I like to see. A small, itty-bitty, tiny fair value gap in here with a bullish order block. But man, if it comes all the way down there, I don't think it's going down there to create another opportunity to go long. We've already came down so deeply. If it goes down this far, it's just going to take that low and then run out even lower and challenge those old daily lows, which I said I wasn't really inclined to expect. So it's like I said, we've seen cable go way beyond what I was expecting for this week, or this month rather. And now we have to take a step back, allow the market to do what it's going to do, let smart money build the narrative, and then we wait for those signatures to manifest to tell us what it's going to do. It's either going to continue going lower, which is fine, or it's going to consolidate, which is what I expect, or it's going to completely reverse and go the other direction, which is fine. I'm not married to any one particular view right now. So if you've been studying what I do, I have a high probability zone in terms of where I think the market's going to go, and I thrive in that zone where everything's clicking, everything's lining up, and I'm saying where it's going to go, and the market goes there. Then there's periods where I go into it's like uncertainty comes in. And because I don't know, and I'm comfortable telling you I don't know, those are the periods where I always lost money, because I had services in the past where I had to provide signals, and it was the worst thing for me to do as an educator, is to have a service where people were dictating to me when I should be doing trades, because I'm paying you money, you better tell me a signal. And if you don't give me a signal, I'm quitting. Well, what becomes the issue or the focus? Being a sound, low risk, high probability trader, or spoon feeding people because they say so and then forcing something out of the marketplace. Well, that's never going to happen. You're imposing your will. I'm teaching you exactly what I learned by doing those stupid things back in the 90s. Okay, so I don't care what some of you want, because what you want isn't necessarily what you need most times. I know what you need, and you're here to trust me, and you're paying me to tell you what to do to think independently and how to do that efficiently. There's periods of time when we're going to have to backpedal and say, okay, I have to wait and not do anything right now. And new traders, new students, you're going to feel like this is the worst thing in the world to go through. But it's the most important thing, because every time I lost lots of money, fortunes, okay, it was because I was doing things when I knew that there wasn't really anything lined up, but yet I had to force the issue. And it's toxic. You don't want to do that. So I'm jawboning a lot because I want you to understand there's a real reason for me not having a clear depiction of what price is going to do, because I don't have anything lined up. So I could very briefly say there's nothing to do, and there it is, and you'll be like, what is this? But I'm trying to explain to you the importance of understanding when not to do something, okay, or when to expect very low expectations, and respecting that, because you as a new student, or a new trader, or say you've been trading for a while and you've tasted profitability, but you always find a way to blow your account. Okay, you'll have a good run, make really good money, build your account up, equity grows, and all of a sudden something happens and the market puts you into a tailspin. It's because you don't understand these moments. Okay, that's what mentorship is all about. And again, like I mentioned before, I've listened to really well-known and well-respected individuals in the trading community on all asset classes. None of them adequately touch on this. And I want to be like a pioneer in that regard, because I have a lot of experience losing lots of real money. And I know why I lost it. It's not because of an indicator. It's not because of a system. It's because of what was between my ears. Okay, this insatiable desire to always want to do something. And you have to suppress that. And the only way you do that is have someone that has walked it before you, knows what it's like to lose lots of real money. And I'm telling you, there's no reason for you to go through those same things that I went through to learn the lesson. Okay, so don't go into this week expecting me to be right or wrong. Okay, that's not what this is about. I'm telling you to have very low expectations on yourself. That way, regardless of what happens this week, typically non-farm payroll weeks are just really, really, they're iffy. It can be either way. It could be a lot of excitement, or it could be a real lackluster doldrums, just really doing nothing. That's typical of the first week of every month. Okay, there's some months where we can expect more fire in the move, or the moves leading up into non-farm payroll. But right now, we don't have it. Okay, and when there are scenarios where non-farm payroll should be very exciting, and then I see those signatures in there, I'll go through and explain to you why I think this is different than our normal protocol for week of non-farm payroll. Every first week of every month, we have very low expectations. And many times you're going to see me throughout the summer months have this same reserve. I don't have a lot of confidence going in, and I want to see post non-farm payroll what we do. And there's nothing wrong with that. Okay, and if you have a problem with that, if you take odds with that, trust me, it's just your infancy as a trader. And it sounds very, very, very arrogant of me to say that, but like I said, I've been doing this a long time. I know where I made mistakes. I know where I blow it all the time. And this is where I did it always. It was always this moment right here. I would always have a really good previous month. And then the first week of the new month, I'd always screw myself over. I don't need to do that stuff again like I did in the 90s. I don't need to relive that. I don't need to prove to you that this is what happens. I'm telling you by experience, just don't do it, okay? And I beat it to death. So let's move on. Last bit of business for today. A Canadian dollar. We came out and closed our inefficiency here. This candle right here has a low of 135.63. And the high, you can see it over here. 135.63. Beautiful. Close that in. We rated the equal highs here. Took a little bit of time, but there it is. We drop into an hourly chart and look at what transpired. I mentioned last Wednesday when we did our review, I said that we were probably going to go higher, and we did. We went right up and closed in the inefficiency, made a higher high, had a really nice order block in here, and it's just overall, it was just a really nice market to focus on because it was so heavily weighted to run that high. And this is what I'm talking about. When you have an underlying narrative on a higher time frame, try not to just throw that away just because of some kind of reaction in here. A lot of people were thinking that it's created the high here. And like I told you, try to resist that. Suppress those desires to want to be right on the higher time frame tops and bottom picks. Believe me, it was hard. It took me years to get into that mindset where I don't need to do that. And I'm talking years into my consistency. It took me 6 years from the first day I started trading. I had initial luck. Then in 2000, we had, the markets, Y2K. I mean, everything was a mess then. And I had to discover how to go go short on markets where I only did longs. And it was very hard for me. It was like I was learning all over again. And I would do really well. And just like I've been saying and kind of like speaking to you in this video, I would have really good periods where I was capturing moves and building equity, and I would blow the account, blow my equity curve, blow it all out. It was always on the first week of the months. It was every single time. And what would happen is I would have a losing trade, and I'd say, okay, well, that was stupid. Let me go in here and fix that with something else. And I would trade with more leverage and tighter stop. It was just, I was feeding that loser. Okay. It was just, I was building the perfect loser. You don't need to do that. So just like I've been talking about, not trying to pick the top in the dollar or picking the low in euro or cable, I'm not trying to pick the top in dollar CAD either, because this could just be a very nice retracement away from what would be expected to be filled. But on that daily chart, we still have these highs up in here that still could be challenged. We're going up, but we haven't really seen big ranges. Like, see how we did these big long down close candles? We've not really seen a lot of big candles in here. We're still in that low volatility environment. Now, we could start seeing large candles on the downside. I'm not saying that that can't happen. I just think that because of the overall institutional order flow that's here, even though we had this big sell-off, it would be typical, okay, for them to just press on through. And this is all a big washout to take them out. And then it just takes time for them to accumulate. Remember, banks have unlimited time because it's their commodity, their selling price. They can outlast you. You want the market to move in your favor, and it doesn't have to. It can stay like this and pretty much do nothing. But as a day trader or a scalper, you can still work within that model. Trying to pick the tops and the bottoms, you're going to create the scenario that leads to your demise. And I'm trying to really press it in this recording here for a psychological build-up on your part and giving you a mindset. Continuity, consistency, and longevity are only going to be seen in your trading if you do what I'm telling you to do in this video. Okay, it's boring, and you've heard me say it many times, and you really don't want to just end the video or just talk about something else, but that's really what this video is about. The psychological things that are going to hurt you. And some of you had some really good weeks the last couple weeks, and you've done really well. Some of you really made an increase in your demo accounts, and you've built your equity up. Some of you shared your live accounts, and you've done very well with, and that's great. I'm not inviting you to do that because in the mentorship, we're focusing primarily on demo because you're learning, okay? As much as I love seeing what you're doing with your results, I want you to remember that that's where we're focusing, okay? So your results are yours. So when you do well, it's a result of you. When you do poorly, it's a result of what you've done. Not what I've said, but what you've done, okay? And I'm teaching you perspective, accountability, responsibility, and also how to keep yourself from blowing yourself out. Because you can do really, really well when the markets are lined up. And everybody, even lucky noobs, can do that. The folks that stay in this game, in this industry for a long period of time, are the ones that know when it's, Kenny Rogers said it perfectly. You have to learn to hold them and know when to fold them. And when the markets are really lined up, you want to really hold them and push and push and push. But when the markets become in an area where, I don't know, it could go higher or it could turn here. Because I'm comfortable telling you I don't know, I want you to respect that and understand that, hey, look, even this guy knows that there is a 50-50 chance. So I don't trade with 50-50, okay? My strike rate isn't 50-50. And I want to keep those high strike rates with my accuracy because I want excellence. And I don't want to promote the idea just because you pay me to teach you. I'm not obligated to give you a setup every single week. I'm not obligated because I'm aware, I'm wise enough to know that there is periods where there isn't going to be that scenario. And you would, if you were really sober-minded about it, and understood what you're learning here, you would quickly agree and say, you know what, that's exactly what I want to learn. I want to know when it's really not in my favor to do this. Even though these tools and these concepts work beautifully and very, very perfect many times, there's periods where even these concepts won't communicate anything to you. It'll just be noise. And that's kind of like what I want you to know about from what we're going into for this week. And don't have a whole lot of, well, I'm gonna use this model, or I'm gonna use that, and it's gonna work. I'm telling you, none of the models are lined up really to give you much this week. None of them. So I kind of wanted to talk to you like that. Like if we were together, if I was doing one-on-ones, which I'm not doing anymore, and don't ask me in emails because people still do that. I don't do one-on-one teachings. But when I did that, there was periods where, because of the scheduling and people would sign up with me, they would encounter weeks like this. And I would tell them, this is what's going on. And they would get frustrated. They say, look, I don't think I'm getting what I'm paying for. And I tell them, this is exactly what you're paying for. You're learning how to stay in this. Because if I tell you what to do when everything's lined up, it will work. But the times when it's not lined up, you need to stop yourself. Because I'm not going to be there to tell you, hey, don't push that mouse. Don't push that button. Don't enter that trade. Once you stop watching this video and Monday comes, the race is off, and we're all going to be doing what we're going to be doing. And I'm telling you, I'm going to be sitting still. Everyone else has their gas pedal pressed to the floor. They're in neutral and they're blowing their engine. There's no reason for you to have that this week. Just relax. Let the market tell us what it's going to do. Let's wait for non-farm payroll this Friday. And then we'll have a little bit more information about what to expect for the remainder of June. And that's how you have high probability scenarios. That's how you have longevity in this business. Okay? So hopefully you got something out of this and you've gleaned something of importance. I think it was worthwhile. This is something I wish I would have learned when I was younger. My first year, if I learned how to do this and the importance of it, I would have saved myself a lot of mental health issues. I would have saved myself a lot of physical health issues, and I certainly would have a whole lot more money today. Okay, so I'll talk to you guys by way of Wednesday's review. Until then, I wish you good luck, good trading.